Good evening and welcome to the ShadowTrader Video Weekly for Sunday, November 10th, 2013. We had some crazy market action over the last couple of days in the S&Ps, where Friday and Thursday made the phenomena that I call candles lining up same-sized bodies. This is a term I coined a long time ago. And it basically is what it is, right? It's basically the candles line up with each other and the size of the bodies is the same, right? The Thursday sell-off and the Friday gain, essentially. And what's really strange about this is the simple fact that we kind of sold off out of nowhere. We had a classic liquidation break on Thursday, which I thought turned into a little bit more than just a liquidation break. When I get to the profile, I'll show you why. Overall volume increased by a decent clip on this Thursday. There was 3.8 billion shares traded on the NYSE, whereas there were only, the average has been about 2.8 to 3 billion lately. So there was an increase in volume. There was definitely distribution. We did close below some prior lows, but apparently all the market wanted to do is just get down to test this 20-period moving average, because Friday we opened relatively flat. We had economic data that morning, and we just took the whole thing back, and again, it had an increase in volume. So it's almost like we had basically a distribution day and then an accumulation day. And this has left a very strange pattern on the daily chart, and it's left what I think could be a hanging man on the weekly. We'll have to see. The market's been up now about 5 weeks in a row, and we'll see where it wants to take it from here. So what I'm going to do now is I'm just going to switch over to the SPX chart, because that's the one that I have my dominant trend lines on. And I'm, I guess, now focusing on the upper channel. Basically, we had a couple of short opportunities in this section of the chart. Basically, a couple of short opportunities earlier here, short opportunity here. This one was tricky, I think, on Thursday. I really didn't see that coming kind of out of nowhere, more like a early liquidation break. And if there's going to be another one, then obviously it has to be here, keeping in line with the trend channels. I've said before that I think that this channel is legitimate. I like the way that multiple touches have happened here, making it really clean. I like the way that these 2 points anchor. And this, I think, is dangling stuff. I think that the channel is still intact, even though there was a little bit of a break here. So that's what I'd be looking for. So I think the market basically has clear sailing now up into that area. My main concern is, again, is the weeklies, is that you're very steep on this time frame, and it's looking like possibly a hanging man. That is, of course, this pattern here, which is the hammer. Basically, it would be a bullish pattern when it's at the low end of a range, such as here. Here you have a little bit of a shadow. Here certainly is a hammer. These are patterns that are bullish when they are at the low end of a range, but they tend to be bearish when they're at the upper end of a range. So it's called either bottoming tail hammer, there's another one, or hanging man. So this could actually be a hanging man on the weekly. We'll have to see. Okay, let's take a gander at the market profile. Here's where things get really interesting. As I was saying earlier, I felt that Thursday's selling, I felt, was different from days past, but it didn't obviously turn into very much. There was a liquidation break early on, which is this area here. Notice that it's very spiky coming down, and then the rest of the value was built here in the lower part, and the point of control was actually here. So all this put together would be construed as relatively bearish. You basically failed to take out an overnight high, and I'll show you how that works. Put on this week here. You classically failed to take out an overnight high here, and right in here. And when price is not able to take out that overnight high, basically it starts to move down, and it moves down very aggressively from the open. This is the open here. You can see that there were just a few ticks of action, up, up, up. Couldn't take out the overnight high, and then you kind of crash down. And what usually happens is you'd be targeting a value area low or a prior point of control. And in this case, we sold off a lot. I don't put too much credence into this selling, but I do put some credence into this selling, because this selling is a little bit more wider in the profile. It is somewhat elongated, and that's not that good. It should be more of a medium-sized profile, kind of meaty like this one, or maybe like this one here right next to it. But still, there was decent amount of selling. Market bounced a little bit midday right in here and then sold off lower. And as I was saying, we had the fairest price to do business at the low end of the range, which is somewhat bearish. But again, all taken back on Friday. On Friday, we opened basically right at the POC, right where the fairest price to do business was. We opened just a couple of ticks below it, and then boom, we were off to the races. So the situation that we have here now is a little bit hard to read because it's mixed signals in that you had clear signs of distribution on Thursday, where you had liquidation break here, which tends to strengthen the market, right? Because this break here takes potential sellers out. And then here on Friday, you have basically a short covering rally early on. This is very spiky move early. That takes potential buyers out. Short covering rallies weaken the market. Then you build a little bit of value. Then you have another spiky move towards the end of the day, kind of taking the market higher. And on Friday, if you'll note, the point of control, which is the fairest price to do business, where the most futures volume went off, and there's too many lines on here, I'll get that off. It never really moved higher with price, and that can be a problem. This is where the fairest price to do business was on Friday, and on a more bullish day, you would expect that POC to move up and close somewhere near the highs, which we didn't get. So there's a lot of mixed signals here. I am carrying forward in my narrative the fact that the overnight high is still the high of the move. This has been something that has served us very well over the last few weeks. Whenever we see that in a move, the overnight high was the high of the move, and then the RTH sessions that are around it didn't go as high, we've always been mentioning that, and lo and behold, it's been true. The market generally will not make the high of the move in the overnight session. It'll make it in an RTH session, and it'll do it with excess. That means that the top of the profile will look like this. However, the excess needs to be somewhat, a little bit higher than the prior high by more than just this. Notice that there's excess on Thursday, but when you look at how much of the excess is above the prior high, it's not really that much. What we're looking for to, as a sign rather, that the auction is over, that the upside is done with, is this big capitulation to the upside, and you want that to be a fresh new high in an RTH session, meaning regular trading hours, and above the prior high. So profile basically showing a good amount of mixed signals here. Okay, back to the markets here. This is the corn futures chart, which I've been talking about at length. I actually did not take a corn position on Friday. If you don't know, the WASDE report, which is World Agricultural, Supply, Demand, something, it's WASDE. The big crop report for corn came out on Friday, and what that did is it made it very hard to get an entry because, look, this is what the corn chart looks like, and corn is pretty volatile. In terms of price-wise, leveraged, I should say, is the word I'm looking for, like most futures are. So I like to kind of be in at just the right spot, and it was, to me, too much of a risk on Friday to put the entry in, so I did not. If you follow me on Twitter, you'll know that I had an entry at 421 earlier in the week. I got stopped out break even. There was a little bit of a lift after touching the 421. I think it was like in here. Then I put the stop break even. We floated back down. Friday we came down even lower. And then midday at noon Eastern time is when the crop report was released, and corn just went ballistic. Overall, I think the reaction was somewhat muted. I was thinking that with the selling being so steady this far, I would have expected more. As I understand it now, things will shift to a more demand-based pricing model, and the American harvest is mostly in. Now the attention will shift towards South America. I don't know really how that's going to impact prices or not. Depends on how that harvest comes in. But the deal is, I think if there is a trade here, if you're still interested in corn, maybe wait for the November monthly bar to form and then take it up and over this area. Overall, very disappointing, I thought, in that, just that the report was released right at the exact same time that we were coming into a trend line, and really would have been the day to buy it. But I think better safe than sorry. It could have easily reacted worse and gone much lower. So no real trade entry in corn, just a tiny scalp on Friday after the number. And like I said, I think if there is a play, wait for the November candle to form. If so, you might have a doji or a monthly hammer on the chart, and then you could have a play going up above the bar or below the bar, right? You could easily just have a buy stop up and over with your stop underneath, and that could be the corn trade. All right, in keeping with the theme of futures, two others I want to talk about. Gold was extremely weak this week. Look at the weekly chart here in the GCs. And what's going on in gold basically is this triangle here is tightening. And as I've been saying for a while, I think what gold wants is lower prices. And if so, my focus is on the monthly, and I'm still looking for the buy just under 1100, which I think would be huge. So that's not going to happen for a little while. Obviously, these are monthly charts, but be aware that gold tends to act very technically, and when it breaks channel support, so to speak, and it breaks key trend lines that have been in place for a while, it tends to have large breaks. So one scenario that I think may play out here in next week is the fact that we'll come down to the trend line, have some sort of a minor bounce, and then when that bounce rolls over, there would probably be a good trade location, I would say, to initiate a short. Okay. One thing that's also interesting is bonds. Bonds got really routed hard on Friday. There was a big sell-off in bonds. I don't really know what the trade is here, but what I'm looking for is that an inverted, or excuse me, not inverted, a regular head and shoulders would form here. Basically, this is your left shoulder, this is the head, and this will be the right shoulder at some point if it builds out here. If so, then there could be a short below the neckline, which would be here, that would bring bonds lower. We shall see. And that's basically it for this week. I don't really have too much to share given just the really choppy nature of the markets and what I was saying earlier about the mixed signals in the profile and the market itself. The Jumbotron stocks that I follow have been relatively choppy. There has, for the first time, started to be a little bit of crack in the armor, I should say, chinks in the armor of some of these stronger names. For instance, I didn't expect Amazon to correct this heavily during the course of this week underneath this low point here, the gap. Usually stocks will hold that low point. They won't go into the gap for a little while longer. Amazon just like fell right into it. Obviously, Tesla has had a spate of bad news over this week. It lost its channel. Priceline reported and is doing just fine. You can see it's coming up to a channel resistance here and could go a little bit higher. Netflix is still just chugging along kind of in a channel here. Goog, same thing, is just fine. Notice this is what I was saying about Goog, like versus Amazon. Like Amazon would be here at the low point, and Goog, you see, hasn't come to the low point of the breakout on the breakout bar. It's just kind of holding there. So I would say all is pretty much okay in the Jumbotron stocks, the majority of which have all, I think pretty much all the big names that we follow in the Jumbotron list, and you can get that at shadowtrader.net under the glossary. All of them have reported at this point. So we'll see what the market trades off of in the coming weeks. So just to recap as well, I would say basically after Friday's huge retracement of the Thursday move down, the tone is cautiously bullish. Just remember that on the weekly time frame, it's a little bit more overextended than it looks on the daily. We are now 5 weeks straight up, 6 if you count this little reversal week. So I would say be careful, kind of approach with caution on the long side, and if it's on the short side, I would say wait for the strong signal to occur, which in this case would be the trend channel resistance, and that is just over 1800. I think that would be a very screaming short in the markets if we could push up that far this coming week, and it is possible. We're at 1770. That's about 30 S&P points away. That's certainly doable in 1 week's time. So I'll be watching for that. All right. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.